Hey traders, Jason here from Leavitt Brothers. Happy Monday, happy Memorial Day weekend. In this video, I'm going to do an update on my State of the Market series. The market is doing well. We've gotten a lot of good trades off the last month. So let's take a look under the hood and kind of gauge the overall health of the market. See if the gains are supported. See if most likely next move is going to be up or down. First quick announcement, I'll be speaking online for the Money Show in about 2 weeks. There's a link below. You can register. Also, check out my mini masterclass in trading. There's also a link below for that. All right, let's get to it. All right, so here's the S&P 500. So we got a big move down, big move up. If I could map out the high and the low here. So the index is trading in the upper half of the range between the high and low. Here's the 200-day moving average. Here's the 50-day moving average. So it's trading in the upper half of its range between the high and low. It's trading in the upper half of its range between the 50 and 200. Overall, I'd say, trend is kind of up, but not up with a lot of force or energy. So market's doing well, not incredibly well, but it's moving up, and we just got to respect the fact that the trend is up, and this gives us the green light to be long. Okay, you don't need everything to be clicking in order to go long. You just need the market to be doing good enough. A lot of people get tuned into what the indexes are doing, and they say like this index is doing one thing and the other index is doing another, and like I don't know, maybe we shouldn't be long right now. And then the market, and then a lot of individual stocks continue to do well. So to me, I look at this and I say the S&P is doing well enough that we should be long. We should maintain our long bias and continue trading to the long side. All right, the big question right now, or the big, I think the one thing that everyone is talking about, or at least thinking about, is the difference between the Nasdaq and everything else. Okay, so in this chart we have the Nasdaq, we have the S&P 500, and we have the S&P 600 small caps. All right, so the Nasdaq's doing incredibly well. It's not that far from its higher lows, higher highs, doing really, really well. S&P, actually, let me go down to the small caps. Small caps, obviously much further from its high. In fact, it's in the bottom half of its range. Over the last month, it's actually just been consolidating. We had a, good move up here, but then a lower low there, and now it's kind of in the middle. So it's obviously lagged. And then the S&P is somewhere in the middle. Okay, it hasn't done as well as the Nasdaq, but it hasn't done as poorly as the small caps. It's just kind of right in the middle. Kind of a gentle uptrend here. So the question is, does this matter? Can the Nasdaq continue to do really well while everything else lags a little bit? Does it matter? Is it a big deal? We have a lot of high quality tech stocks that are building out huge platforms that are likely to do very well for many years into the future, while the small caps have a lot of regional banks, utilities, real estate. Same thing with the S&P. So does it matter that utility stocks are lagging? Does it matter that real estate stocks or banks are lagging? That's the question that's the one thing that's holding the market back. It's the one thing that we got to consider. All right, let's look at some of the breadth. All right, what we have here is we have the 200-day and the 50-day moving averages of the NYSE AD line, and then we have the S&P 500 down here. So the red line is the 200-day moving average. So obviously it traded in a range here. It has traded in a range here for nearly 2 months, and right now it's near the top of its range. So that's not bad. 200-day moving average of the AD line near a 2-month high. Okay, it'd be nice if it could break out. The 50-day moving average has been trending up for, almost 2 months. Not almost 2 months, but probably about 6-7 weeks. And it is at a high, and it's moving up at a pretty good rate. So that's pretty good support. So overall, when you consider that the market's bottom over here was about 40 days ago, that the 50-day moving average over here contains, 10 data points from over here, and it's still doing really well. So over the next 10 days, these data points are all going to all fall off. So this should be able to continue up. Even if the market does so and not great, this line will still continue up because of all these bad data points are going to fall off the calculation. So overall, really good support here from the longer term moving averages of the AD line at the NYSE. Now, zooming in and looking at the overall picture, this is the 10-day moving average. And what we have here is we're starting to get a divergence here. Okay, and divergences tend to lead to short-term pullbacks, not big pullbacks, but just short-term. Divergence there, divergence here didn't lead to much. We got a little hiccup there. Whoops, got to draw my line straight. Divergence there a little bit as the market dipped there. Divergence there. Okay, induced this pullback. So we got a divergence here. When the market does well, you tend to get steady prints above zero with minor dips below. So we got a minor dip here. Okay, and now we're getting a lower high. So if we get more prints down here, then I'm gonna say like this thing is gonna drop. Okay, I don't know how much or I don't know how far or how long, but it's gonna drop if this line doesn't get back above zero and stay there. The cumulative line is doing well. Okay, rode its 50 up, came down, got rejected by its 50. Now it's getting cupped by its 50. So while the near term says, hey, back against the wall, we need to improve here, the overall picture says, hey, we're consolidating above the 50. The 50 is actually starting to curl up here. So overall, we're doing fine. All right, let's look at the Nasdaq. This is same charts as the last two, but we're doing the Nasdaq 80 volume line. Not the 80 line, but the 80 volume line. Both are in really good shape, so I'm not going to spend too much time with it. 200-day moving average of the 80 line is at a multi-year high. 50-day moving average of the 80 volume line is at like more than a 10-year high. Okay, so the last 50 days have been stronger than any other 50-day period going back at least 10 years. And when you consider that this 50-day MA contains like the last 10 data points on the way down, this thing's even going to go even higher over the next 2 weeks. Even if the market's so it's going to go higher. So Nasdaq is huge uptrend, fully supported. Here's the 10-day moving average of the 80 volume line. We're getting a divergence here, but it doesn't really mean much because divergences way above zero just aren't that potent. Okay, I look at this and say, we have really solid prints above zero, and that's fully supportive of an uptrending market. And then we have obviously big uptrend right here from the cumulative. Okay, so whether you look at the 10-day moving average, the 50-day moving average, the 200-day moving average, or the cumulative line, everything at the NAS says full speed ahead, market's fully supported. All right, here is S&P 500 versus percentage of S&P stocks above their 20-day moving average and percentage of stocks above their 50. Okay, above their 20, okay, first I'll point out, like typically you get, when the market's doing well, you get a lot of prints above zero, dips below, divergences tend to lead to tops, local tops, and then dips below typically follow. Okay, so if you look at like divergences here, we have, divergence here, while the market was doing this, S&P moved up, divergence there, and we got a dip. Where else? So we got higher high here, but we got divergence there, and then we got a dip that followed. All right, so right now we have market moving up, slight divergence here, but this is at a pretty high level, so it's not that meaningful, but we're getting a little bit more of a pronounced divergence here. Okay, so we're going to want more, I think we want more participation in the S&P, but the question that I raised earlier was, there's a lot of banks and financials and utilities and stuff at the S&P, and do we care? Do we care that they're lagging? Do we care that they're not above their 50-day moving average? Okay, that's been the question for the last at least month, that while tech stocks have continued to go up, certain stocks have been left behind. Does it matter? Okay, I'm going to say that the market can continue up, but eventually this is going to matter. Okay, I don't want to, I'm going to trust the charts. I'm going to trust the indicators. Divergences have played out. It doesn't have to induce big moves down, but divergence here, induce that. Divergence here, induce that. Divergence here obviously began the downtrend over there. Okay, so we're going to want more participation from the S&P 500, even if it comes from utilities and some other groups. All right, same as last chart. Here's S&P 500. This is the percentage of S&P stocks above their 200-day moving average. So I want to point something out here. Back in early 2019, when the S&P had finally gotten above its 200-day moving average, the number of stocks above their 200 was already up at like the 70% range. Okay, right now, the S&P is close to its 200, not there yet, but the number of stocks is down under 40%. So if the S&P comes up here, in order for the current situation to match the past, we're going to need this to get up here. We're going to need a big improvement. It's possible because a lot of stocks could be sitting right underneath their 200, and all they need is a little move up, and this thing could jump. But it's just something to keep a lookout for, is that if the S&P moves up, you're going to want to see the number of stocks trading above their 200 moving averages also move up. Otherwise, we're going to get a pretty big divergence here, especially if it can't even get above the 50% line. All right, here is the Nasdaq versus the percentage of Nasdaq 100 stocks above their 50 and above their 200. So above their 50, this is a really good print here. For nearly a month, we've had 70 to 95% of stocks above their 200. So that's like a lot of support there. When you're talking about the 200, it's improving, not as high as you'd think, considering the Nasdaq is this far above its 200, and it's been above its 200 for 5-6 weeks. So we got some improvement here, but not as much as you would think. All right, here is, this chart's not fitting. I move it over. All right, so here is the Russell down below is, actually I say the blue line here is the SP 500. Down below is the Russell 2000 1-month high-low. Okay, number of stocks making a high, a 1-month high versus number of stocks making a new low. Okay, when the market trends up, say here, you tend to get steady prints just above zero. Okay, rolling up and down, up and down, up and down. And then divergences matter. Okay, you get like a divergence here and the market kind of dropped. Okay, divergence here, market dropped. And then when trouble starts to brew, you get like a deeper print, moved above, but then didn't move too much above and then lost it again. Okay, so what I'm looking for here, we've had good prints above zero, but recently it dropped below. Now it's coming back above, and now it's kind of starting to lose it again. So we're going to want to see what happens over here. Okay, do we get a recovery? Okay, right now a divergence is forming. Okay, we got higher high from the market, lower high from this indicator. Okay, does this indicator get back above zero and actually like stay there, and print a decent level, or are we going to get a dip here? Okay, we get a dip, it doesn't mean the market's going to tank immediately, but it tells you that very slowly some weakness is building in, and we got to watch out for that. We got to be a little bit more careful, tighter stops on trades, be less aggressive. Okay, something to watch out for. Okay, so overall, not bad. Some breadth indicators fully support the market while others are lagging some. The question is whether a split market can last. The Nasdaq is doing really, really well, while the S&P is only doing pretty good. Okay, does it matter that financials and real estate and utilities have dragged on the S&P? Like, do we care? Does the entire market have to come along for the ride, or is it okay for there to be, great advancements in tech while other sectors lag? Okay. Luckily, we don't have to answer this question because we trade, or at least I trade, individual stocks, not the indexes. Right now, the indexes are doing well enough or very good, and this is good enough to trade stocks that are performing well and setting up. Okay, this is really important. A lot of people look at the indexes and say, oh, the market's not going to go up because of this, and then 2 weeks later, the indexes are up another 3 or 4%, and several stocks moved up 10 or 20%. Okay, don't get too caught up in what the indexes are doing. Okay, as long as they're somewhat supportive, you're fine. Okay, again, if the indexes trade flat over the next 2 weeks, there will be dozens of stocks that move, that rally 10 to 20%. We've had a lot of great trades. I'll show you a couple of them right here. Okay, here's Car Gurus. Okay, we profiled the stock when it was over in here. It broke out, moved up to our target at 24, came back down. We reprofiled it when it was testing its 50-day moving average. And, we got a nice bounce off that, and now it's setting up in a nice little tight pattern right underneath resistance. So the market, as long as the market doesn't fall hard, we're going to probably get a nice breakout here and get a few more points. Okay. Another stock we had was Brinker. Okay. We profiled it back here, broke out in the 17 range, quickly moved up to our target at 26. I guess you can say we got kind of lucky here because it went just above our 26. Has done a little double bottom here on its 50-day. We reprofiled it again last week, and we've gotten a nice bounce. Okay, and our target right now is up at 28. So that's, and so right now we're long. Okay, and we might get a dip and then a continuation, or we might just get a press higher. But right now we're long with stops in place. Another one of our trades was Western Gas. Okay, we profiled it back here when it was basing. Okay, nice little cup and handle base pattern. Broke out, missed the target, but that's all right. You don't always hit them. Pulled back, little support from its 50. Pulled back long enough for its stochastic to cycle down, and now it's back up to its high, setting up here with obvious resistance. So market this one's another one that you could play again as a continuation play. All right, so even though the indexes are maybe a little mixed, sending mixed signals with Nasdaq doing well, small caps not doing well, individual stocks are definitely tradable. All right, thanks for listening. You can follow my YouTube channel by clicking the red subscribe button. Check out Leavitt Brothers, where we offer market analysis and trading ideas to the financial community. And also check out my mini masterclass in trading. It's free. There's a link below. All right, again, thanks for listening. See you next time.